Good morning, everyone. Futures Barizio here. I hope everybody's doing well. It is Wednesday, August 5th, 2026, 11:49 a.m. New York City time. So just before lunchtime here. I hope everybody's having a great week. Um, I've been away, as I mentioned, I think on a previous video. I actually tried to record a video last, I think, Wednesday night, about a week ago. Think it was Wednesday or Thursday night in my hotel room because I was traveling. And there was no video. There was audio, but there was no video. So I ended up deleting the video from my channel. I didn't even bother remaking it. So, and then I was expecting to be back Sunday night, but my flight home on Sunday night was canceled. So I ended up staying where I was again on Sunday. And then I did get home Monday night, actually very early yesterday morning, Tuesday morning. So Monday was a waste. And then yesterday, I just spent the day trying to recover and just kind of get settled back. So here we are. And so make sure you smash the like button, subscribe to the channel. Any questions, comments, leave them down below. And we'll just jump right in. Now, I had a question actually in Discord. Somebody was asking me about the range charts, and they said, well, the 500 range is a large range, right? And again, these are range candles you're looking at. And I run it on 500. And so a 500 range candle is a 50 pip candle. So that would mean if you had this set up here to 500, that every candle you'd see on the chart would be 50 pips. So it would not paint a new candle until price moves at 50 pips. So again, it's not time based, it's price based. And they said, well, that's kind of a long one. And I did say initially that the 500 range candles are essentially like a day chart, right? It's essentially like trading on a daily chart. So if you want to be, more of a medium term swing trader, then you certainly, I said, well, then you can cut the range down. I just find that I don't get as many of those good three candle patterns like I show you on the 500. Let me just switch back to 500 for a sec here. See if I can find one on this chart really quick here. Um, Well, here's one on the because I know this one's here. So you got something like this on the Aussie US dollar where you get all these multiple range candles all kind of railroad tracking next to each other. This is an area I would watch for a breakout, right? So this is consolidation. The range candles are just moving up and down in a really tight range, which is really easy to spot on the chart. And then you just wait for a breakout. Now, in this case, I'm probably leaning more bullish here. I mean, we did have a downtrend, but now we've broken a little higher. We did put in a higher low right here. So I do have an alert set above and below there. So that's an example of that. Now on the 250, I find that I don't get as many of those type of patterns. If we go back to the GBP CAD. So I said, look, if you want to use it on a smaller one, that's fine. You just have to, you may not get as many of those three, I like at least three candles in those consolidation patterns. And I also like them to when they break out to preferably be in the direction of the larger trend, because otherwise you can get fake outs and liquidity sweeps. Okay. And, that's ends up not being good. So, but I said, look, if you want to use a shorter one, go for it. And I still think the range candles are better than regular candlesticks. Now, I have it set to 250 now, which means every one of these candles is 25 pips instead of 50. Okay. And this is about equivalent to around a 4 hour chart. If I just flip over to the 4 hour chart, you can see it looks pretty similar. Okay. But I still think the range candles are easier to see patterns and market structure than candlesticks because, again, it's consolidating price movement into range candles instead of just every 4 hours it paints a new candle, regardless of what price does. So this just kind of stays static. When there's something actually moving in the market, then it will paint a candle. Okay. And so you can see right here. Now I have the moving averages turned on. You can, of course, can do this without the moving averages. And I just use the 21 and 34 SMA simple moving averages. You guys know I use this in my futures trading. I day trade futures. But this is Forex. I don't generally use it, but I think there's a little bit more value using these down on the shorter ranges. And you can see, I do like these two moving average settings. There's no magic to any moving average setting. I mean, it all just depends what you're trying to see. Remember, moving averages are all lagging anyways. And, there isn't any magical setting for moving averages. But for the most part, just in terms of just trend following, I find the 21 and 34 to be a good dynamic range. And you can see here with this pair here, as it broke out here, um, and then, finally we had market structure break probably above this high. If you want to really follow market structure, this was our break right here. Okay. I mean, we did put in a higher low right here. Certainly you could have traded that. But, if you're just looking at pure market structure, this was the break. And then you can see we pulled back very nicely right into the moving averages and right in between them. Perfect. Then we had another one here. Again, no market structure breach. So, right, this becomes our new market structure. At this point, price pulls back. So now we can get rid of this line. We have another move up, and now we're pulling back again. And this is our current structure. And you can see it's very easy to see with the range bar. So as long as price remains above this high, I mean this low, then I consider this a pullback. Now, this is a really deep pullback, admittedly, but it's not out of the ordinary for the pound Canadian. You can see on this one, we had one, two, three. We had three candles, so that's 75 pip pullback. Now, on this one, we're on one, two, we're up to four right now, but that's still not unusual. I mean, even here, we did have a couple of green candles scattered in between here, but still, we had one, two, three, four, five red ones, and then, two green ones here. And then this was our entry one, so I don't count that one because that's the one we re entered on. All right. So yeah, if you want to, try a shorter range candles, if you're playing around with these and you don't want to wait around for, the kind of that more investing or position holding one that you might get with the on the 50 range, then I think this is a good compromise for swing traders. Now, I said right from the beginning, of course, you could do this on any range. You could set this to, you could set this to, I mean, if you wanted a scalp, you could set it to 10 or 20. So that would be like a one or two pip bars, which I think would be crazy. But even if you went to like 100, that would be 10 pip bars. That would be more of like maybe day trades. Okay. Um, Whoops. I don't want to zoom too much. But, if I went to like 100, right? You can see here's that uptrend on the 100. Now here, obviously the pullbacks are a lot more dramatic. Okay. They pull way underneath the moving averages. Those are those last two moves I showed you on the 250 right here and right here. You can see they pull under, and then when they cross back up, obviously this is the better entry way down at the bottom here, which is why I like the 250, because on the 250 you actually um, you can see these really clear. As soon as this paints a green candle, even if it breaks below the moving averages, it's fine as long as it doesn't break market structure. So even if this pullback comes all the way down here and even dips underneath the 34, which is the blue line, as long as it doesn't violate this low right here, then I'm okay with that. So I would sit here and wait, and I'll see if I can get a green candle. Any solid green candle now, uh, as long as it closes up near the highs and don't have like a big wick on top, like this, and see how both of these closed right at the high. They threw a wick, grabbed the liquidity inside the zone, went up, closed at the high, closed at the high, right? These are very similar looking. If you get something like that, that's a good, that's a pretty safe long position. Okay. Put your stop below the swing, maybe a few pips below, give it a little breathing room. Maybe even put it below. If it comes down here, I'd probably even put it below this low to really give it some breathing room in case you get one more last wick down, especially on a pair like this, which can be volatile. And then you let it rock. And then you just, trade it up at least back to the old highs, if not to a new high. You know, you could take a trend line and draw it along here on the upside. And then if you do take a long and price comes up, when your take profit, as soon as it tags the trend line, either with a wick, even with a wick, then, you'd be out of the trade at that point. So, that's a good kind of guide to do that. Conservatively, you just go back to the old high, But if this uptrend is going to continue, obviously it's going to make a new high, and you don't want to leave too much on the table. All right. So that's pound Canadian. We can do the same thing with any other pair. So here's the Aussie US dollar. Now here's one here where the it traded through the moving averages right here. Okay, way down and then went up. Okay, and that's fine. If you look from a market structure standpoint, I mean, it's a little harder to see kind of the origin of this uptrend. Yes, you can point to this low down here for sure. That's definite. But maybe even like right here, where this little consolidation happened, came down, then retested it right here, right? So this is kind of a market structure area here. But you can see either way, neither area was violated, and then eventually went back up. Now, I know, people are going to look at this and say, well, what about right here? Came into the moving average, you got a high at the close, and then it came all the way back down here before it finally moved up. Okay. And that is 100% true. And if you had gone long right here and you had a stop below here, you would have been stopped out. Nothing is perfect, guys. Okay. Nothing is perfect. All right. But as long as your bias stayed the same, then you would just wait. And it went down, 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 down. Right. You practice good, discipline, and you were out of this trade. Either you close it or you got stopped. That's fine. You put it below this candle. It's maybe a 30 pip stop loss. You got knocked out. Then it went down another, 75 pips down. And then boom, you get this green candle here, still above market structure. And then it went up. Okay. Then we had this one right here. This one actually happened on Monday. Again, these are range charts, so these are not any time based. So this entry actually came on Monday around 10 a.m. It hasn't been another entry since, but if you were in it from here, all right, then you would be fine. Okay, and you can just be holding this trade, and you'd be in, at least 50 pips of profit right now. Even if you waited till the close of this candle, then you get two more. That's 50 pips. Okay, because again, these are 25 pip range candles. All right, and we can just do that here. Here's the Euro USD. Let's take that off. Now, these pullbacks are a little more shallow. And again, every pair is going to be a little different. But, you look back at, previous trading, and try to get an idea. And this is a case for people that say you should only trade a handful of assets so you get to know it really well. Might be one of the reasons why people say that, because in this case, um, you don't get those super deep pullbacks. Although we did here, right here, we broke above the moving average. Here we broke above the moving average. So you never know, right? But when a trend is, really strong and really starting to push high, you're going to get shallower pullbacks because the buyers are really in control. And you have this wick that dives right into the moving average range. Tiny little doji here closes right at the high, after wicking in. That's a pretty good buy signal, right? So you could have gone long here, put your stop below here, and then it went. And then you had another entry here. Again, pretty shallow pullback. Maybe you took this one, maybe you didn't, but it would be a good trade. All right. Stop below here. And then, again, you'd be up 50 pips on that. All right. And we can just do the same thing now. Here's the pound US dollar, pull back, pull back. Now, this one's interesting because now it's, we have this red candle. So will this be another pullback? We can like say, okay, that's actually really not market structure because it didn't lead to a new high. So to me, this is probably the more accurate um, low right here because this low led to this new high. This low did not. So, what's going to happen now? Are we still going to, is this just like maybe news driven right here? This happened this morning about 2 hours ago. And, we just going to like pull back and then keep going? Or is this the top and now we're going to start trending lower again? And this is where looking at your higher ranges can look. If we go to the 500, I don't really see anything obvious here. We did have this big move down, so maybe this whole thing up has just been um, a retracement of this move down, and now we start moving lower, but it's not real obvious. But anyways, this is a warning, and I wouldn't necessarily but I mean, if you had taken a long here, you still would have been 75 pips up, but then you had this red candle. So if you said, oh, I want to get out now, then you still would have had a 50 pip profit on this move, right? Because you still would have had this candle and this candle fully painted. Then you had this one would giving you 75 pips. But then if you waited for this one to close, it closed back at, here. And so that would give back 25 of those 75 pips. All right. So again, nothing's perfect. Here's the New Zealand US dollar again, deep pullback into the moving average just below them actually. So here's kind of a little four candle setup right here, right? Consolidation. You could have gone long on this one. It's fine as long as your stop was a little further away because you came back here and you retested this zone multiple times. But as long as you gave it some breathing room, you would have survived all of this drawdown. Um, or at least break even stuff. And then went up, made a new high. There's no trade here now because we still haven't had a decent sized pullback. All right. And so on and on and on we go. Okay. You can say like, here's Aussie yen. There's nothing here right now in terms of pullback. We want to again see this thing pull back. Market structure here. Obviously, this looks like maybe it's just starting an uptrend. And obviously the structure level is sitting way down here. So I would expect, if this uptrend is going to continue at some point, we'll get a deeper pullback, something like that. I don't know how far it'll go, and then we wait for a strong bull signal and then maybe go up for new highs. But until we get that, we're not interested. So again, this basically mirrors essentially like a 4 hour chart, regular candlestick chart. And so it's slow enough where you don't have to like be constantly looking at charts, but it's fast enough where if you're looking at a lot of pairs, you should be able to get at least a handful of trades every week, if not more, just depending what's trending. Obviously, if you get sideways markets, you want to avoid this stuff, right? Because moving average strategies, especially, are a disaster in consolidating markets. This like something like the Aussie cat. I mean, just looking at this chart hurts my eyes. But look at these moving. I mean, this I have no interest in this unless this entire zone eventually clears out. I mean, yes, you could say there's little trading opportunities in here, like right here, right here. There's really nothing in here. There's really nothing here. Maybe there was one right here, right? Break, and then retest. But, for the most part, this is just an ugly chart. So I would just stay away from it. You can look at stuff like Swiss yen. I can get rid of these alerts. These are old. So stuff like that. And, all right, hold on one second. I'll be right back, guys. All right, guys. Sorry, I'm back. I've been gone for a while. Anyways, so yeah, so that's how you can use this if you want to use um, a shorter range bar. And again, you don't need the moving averages, or you can use, if you wanted to use no indicator, no moving averages, or different ones, or you want to try an oscillator at the bottom, whatever your preferred type of confirmation is, or whether you just want to use market structure, that's fine. The nice thing about these moving averages is that they do give you a little bit of a guide, but again, you don't need them because the range candles are pretty nice. It's just that in situations like this, it's hard to know where the right entry. So like you get this bull candle, but then it went down and probably would have stopped you out. Where if you waited for it to pull back and get into the moving averages, because obviously this pair does that a lot, has these deep pullbacks, it just gives you a nice visual of where it might be good to wait. And you might miss trades because sometimes if the market's really super bullish or there's news, you may not get the pullback, deep pullback. I mean, maybe this candle was it, and then it shot up, and you missed the trade. So be it. Again, nothing's perfect. Nothing's going to work all the time, and you're going to miss trades, and you're going to take some that are going to be losers. That's just the way it goes. So, um, so I definitely would encourage you to play around with it. All right. So I'm not going to beat a dead horse. You can kind of see that with all of these. This like pound kiwi, for instance, I would say right now is pretty much sideways. We got these big swings, but we're just kind of like there's no three candles set up here, consolidation. Now we're just trading in this big range. So I wouldn't be interested in that. This is the New Zealand Canadian. Again, I'd probably be waiting for a deeper pullback. This is one where we didn't really get much of a pullback, right? We had this right here and then went up and then, failed to Didn't come back down into the moving average, went up, did make a new high, and now it's pulling back. So again, you have to sometimes play around with the moving average lengths. It's going to be hard to get one setting that's good, but maybe in this case, it's fine. You just would have missed this trade. Like if you didn't take this, went up and made a new high, it didn't go very far, but it's 50 pips from the close of this candle, then up here. But we didn't get that nice deep pull back into the moving average. So maybe you just didn't take that one. This New Zealand yen, for instance. Let's see what happens with this. We were in the downtrend here, but then we had this kind of equal low, broke through, came back. So I'm not necessarily keen to jump in long on this yet, but we are starting to look like maybe we're going to try to turn higher. So you could certainly take a long from here and put your stop below here. It would be a little more risky, I think, because we haven't confirmed the end of the downtrend, but we do have equal lows here, suggesting that sellers were running out of steam here and the buyers maybe are becoming more active. So, you know, regardless of what the moving average is telling you, I mean, just looking at what happened right here, there's obviously a lot of push and pull between buyers and sellers. This whole area, you see red, green, red, green, red, green, rejection multiple times off this low, and then an impulsive move out of that area. So then we have this pullback. Is this an entry? I don't know, but again, you can kind of see what's happening with that. All right, so I just wanted to talk about that just for anybody that is maybe looking at this but doesn't want to run it off the 50 pip range candles, just too long being on a daily chart. This is a good swing trading strategy off the 4 hour. Still, I think a good medium length time frame that takes a lot of noise out, but still gives you more opportunities. Um, so I just want to point that out. I'm not going to beat a dead horse. I did not take any. I keep zooming. I did not take any trades today in futures. So we'll take a fast look. Again, with me just kind of getting settled back here, I just really haven't been looking at this. This probably, even though the moving averages, now this is one right here, like, we've got these equal lows down here. So even though this is technically an entry, I'm not sure, if this will keep going, but, we have price hung up at these equal lows right here. But, this could be a short entry right here. I did not take it. We'll see what happens with that. Corn had this entry, which was a nice one. This was back on Monday. Again, I was not around to do any trading on Monday. So, but this is, we've had the moving averages roll over, putting in lower highs, lower lows, had this move down, pull back right into the moving averages after they crossed over and then down. So this would have been a nice entry, but there's nothing there since then. Um, on soybeans, this was an entry here, break above the moving average, but still below, any market structure, which is probably like right about here and down to new lows. And then with this little pullback, did go a tiny bit and then reversed. But again, I didn't take that anyways. The last trade on soybean meal, again, just going on this downtrend, again, was on Monday. And then lastly, soybean oil is kind of a mess right now. I'm not really doing anything with soybean oil. You can see even the moving averages are very flat and just twisting around here. So until this straightens itself out, I'm not trading that. So again, guys, I haven't really done much. And I haven't taken really anything in terms of futures the last couple of days, but I did want to, just review it really quick. And again, on futures, I use the 20 range, which is, a much smaller range candle, but it's because I'm only day trading these. So I'm not holding on to these trades, generally not holding on to them outside of the session I take them on. Sometimes I do let it spill over into the next session, but a lot of times I just close it at the end of the day. Depends what it looks like. So, anyways, yeah, so I'm going to leave it there. Questions, comments, leave them down below. Make sure you smash the like button, subscribe to the channel, and let me know if this was helpful. Let me know if you're using these range candles at all, or is this something completely out of whack for you? But they do have a lot of nice advantages. Nothing's perfect, like I said, and whether you choose to use moving averages or not, and what range setting you use, you have to play around with that based on what your appetite is for how often you're going to be looking at charts. And I just personally don't, at least in Forex, I don't like the day trade and I certainly don't scalp them. And so I'm looking to hold Forex trades at least a couple of days, anyways. So that's why the higher range bars like the 250 and the 500 work for me. It slows things down, cleans things up, less noise, less garbage moves, and the range bars actually help that too because they really, you don't see any bars painting until it reaches that threshold. So if you keep it up there at a pretty high number, then like at least 250, uh, or 500, which is a 25 or a 50 pip candle, then that really helps slow things down and give you, um, you know, time to like digest and make sure it's working, and you're not just making rash decisions to jump in because you're seeing the chart move. So all right. So I hope that was helpful. I'll keep tracking on that, and if I take any trades like that, I'll try to point them out, and we'll see if maybe that's a better setting. But again, it really just depends on the time frame, on the time horizon you have, how often you want to look at charts. Do you only want to look at them once a day, twice a day, or do you want to be a little bit more active? And that's really what you kind of have to decide with these. But the range bars, I do really think help that no matter which one you choose. So, all right. So have a great day, guys. I'll be back tomorrow, and you take care. Have a good rest of the day, and make sure you smash the like, subscribe to the channel on your way out. Thanks.